VAT is one of the largest income sources for governments. So VAT is an indirect tax, which means that is tax that doesn't hit income when it arises, but more when it is spent. And it's a tax regulated by the EU at the EU level. So basically there are certain principles which are valid throughout the whole EU, and then each national country can change that. So basically Italy runs on an ordinary VAT rate of 22% and two reduced rate of 10% and 4%. So the idea is not penalizing certain trades or certain items. For instance, VAT on most foods is 4% and on cars is 22%. Why that? Because you don't want to penalize people for basic needs. And on top of that, there are also zero rated VAT items. For instance, health expenses, financial services, or education expenses. You do not pay VAT on your university course enrollment, or you do not pay VAT on any prescription or drugs or medical expenses. This is something you shouldn't do that. That's penalizing people. So letting you pay to get your health back, letting you pay VAT is not a great idea. And you must bear in mind that the financial burden of VAT is carried by the final customer, because he or she is the one that has to pay VAT in full, while in the whole supply chain, VAT is neutral. So neutral means that if you are a business in the supply chain, you charge VAT and then you pay VAT on items and services you buy. So you do not settle the liability of your output VAT, but you settle the difference between output and input VAT. So this is why it is neutral on you. However, there are multiple limitations. So first of all, the government might decide VAT limited deductibility items. For instance, motor car expenses or mobile telephone expenses or residential premises expenses or mixed use business and personal items. So those are based by the law. You cannot say, hey, I want to challenge that because I think it's different. So for instance, for motor cars expenses, you can only deduct 40% VAT regardless of the use. So if you use your private motor car for 90% of the time for business purposes, well, they don't care, it's 40%. So basically you get the invoice, whatever VAT you pay, 40% is deductible, 60% is not deductible. So for 60% of that, you're treated as the final consumer. But 40% of that, you can claim that against your actual liability. Now, it's very important to understand also how is VAT levied. So it's also not neutral because it's based on the accrual basis. So you do not pay VAT or you do not collect VAT when you actually pay that or in the period you pay that, but on the accrual basis. So let's say that you raised an invoice for a service which was due whatever, let's say today, and you give 60 days credit. However, you need to settle your liability in the next 15 days if you're a monthly taxpayer. Well, in that case, you basically gave free credit to the government, to the tax office, because you already accounted for VAT, so you need to pay that. And you carry the risk of credit and not being paid. So if your client doesn't pay you, you need to recover that VAT with a note of credit. But that's, that takes time, you already paid for that. And also, it is very important to understand how do you call for a VAT credit. And if you think your business cannot have a VAT credit, you're totally wrong. So the first scenario is that when you set up a new business and you have to buy a lot of machinery and items, you buy that, you pay a lot of VAT, but you will make revenues afterwards. Or when you trade with foreign countries. So if you sell to a business in Italy, you must charge local VAT. But if you sell the same items or the same service abroad, you do not charge any VAT. But if you buy locally, you pay VAT. So you find yourself with a VAT credit. What can you do for that? So the first case is just waiting whenever you have a VAT liability and set it off against it. Or you can call for a refund. And honestly, calling for a refund, it takes a little bit of time because you need to request to the tax office and they issue an audit. You have to provide documents, you need to liaise with an accountant, etc., etc. Or you can offset it against other liabilities. So let's say that you have a 5,000 euros VAT credit, but you must pay 5,000 euros of VAT of corporate tax, while you can offset those and do not pay anything. So the bottom line of this is that VAT is not just a simple tax. It's very complicated and it has impact on your business, especially on the cash flow of your business. So whenever you think about your business activity or to set it up, you must also consider that. There might be a lag timing of collecting VAT, however, you have to pay in advance. So you need to be twice as smart as to run your business that way. Whenever you give credit, remember, you're not giving credit only to your client, you're also giving credit to the tax office on the VAT.